Hello everyone and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. And once again, we're here at the Vancouver Resource Investment Conference and very honored to be joined by the president of Feneck Consulting, Mr. John Feneck. Great to talk to you again.
Likewise, Jesse. Thanks for having me.
Thank you for being here. Awesome to talk in person. So first I wanted to do a bit of a broader overview of the VRIC. What are some of the main themes coming out of this conference that you've noticed that you think are particularly important for investors to be paying attention to?
Sure. So, having enough cash in the balance sheet is being discussed, amongst CEOs, because we saw some companies last year fall short on that level, right? And it woke a lot of people up in the industry and woke clients up. Something like Alexco was pretty shocking to see happen, considering where the hopes and dreams were of that stock 2 or 3 years ago, right? So I think when you have the opportunity to cash up, you need to take it, and that's one of the themes I'm seeing here. Another is just that there's a good vibe here. It's like I've been to conferences now for many years, and this is nice to attend a conference when we're actually in an uptrend. Right, so the last time we talked, it was probably about 1,700 gold, and now we're at 1925, 1927. Yeah. So it's like people are interested in learning more, both on the investor level, but also some of the financial advisors I talk to that see, that the S&P may peak out here around 4,200, and then we may go into a recession. In which case, teach me about some other asset classes like mining that I don't know about.
Yeah. That's great and makes total sense. I want to go through some commodities with you and get your thoughts on where they stand currently in your mind and where you think they're headed. And I want to start with lithium because there's been a lot of talk about battery metals recently. That's been trending. Lithium carbonate prices obviously did very well last year. So I'm wondering where you see lithium positioned, and do you think the EV side of things, there's all this talk about that we're going to convert our vehicle fleet into EVs by a certain time. Obviously, we can't predict, but do you think the investment thesis for lithium holds up if this EV revolution doesn't take place?
There's definitely going to be a large sell-off if that were to occur, because lithium prices have done extremely well. The largest ETF out there is LIT, and if you take a look at that chart over 3-5 years, it's done extremely well versus other commodities. So there is a risk of a sell-off, in lithium because it's way ahead of, say, natural gas, silver, etc., in terms of price appreciation. But we like a couple of names in that space. One is Idaho Champion, which I mentioned on your program last time. We mentioned it at 4 cents. It hit 7 cents US in less than 6 weeks. It's up substantially because of their lithium purchase. So basically they bought a land package in Quebec. They're just buying up this region right near Patriot. And Patriot's one of the best mining stocks that I've seen over the last 3 or 5 years, right? So they are, you see companies doing this, right? It's not just about production, it's about land grab, and the stock is responding well as a result, and that's GLDRF in the States and ITKO in Canada. Another is Lithium Bank. I've known Gianni, the founder there, co-founder, for 3-4 years. He also was the former CEO of Copper Bank. Faraday is the new name now. But Lithium Bank is really interesting because they have 2 projects, both coming out with PEAs here in the first half of the year. So, when people look for catalysts, that's a great catalyst, right? And you've got 2 of them coming in one stock. So that's LBNK in Canada and LBNKF in the States.
Great. Yeah, Johnny's somebody, he lives in Zagreb, Croatia, where I'm at. So that's definitely right. Planning to have him on the show this year. So look forward to that. I wanted to move on to copper because once again, there's a lot of talk, not only for the push for the new green economy, but also just a rising middle class in the East. We're seeing more people able to access electricity. And of course, we hope it continues moving in that direction, which means copper will be in demand there. So I'm wondering what your thoughts are on the copper space. And I've also heard people talking about if there is a deep enough recession that could kind of stop a copper bull run in its tracks. So I'd like to get your thoughts on that as well.
Yeah, taking the second question first, I agree. Copper will be affected because it is not like a precious metal, right? Gold and silver will protect, in the case of an economic downturn. Eventually, it'll take some time, but it will happen. Copper is a bullish commodity, so it's reacting that way right now, right? You've seen the impetus for this rally over the last 2 or 3 months, to me, was when China went away from their zero COVID policy. That's significant, and we got all over copper stocks as a result of that. We as equity managers tend to go into the equities as opposed to buying the commodities unless they're super bombed out. But copper's been in a beautiful uptrend here. So yes, I mean, I think in the near term, it looks very good. It broke $4 like butter, $4 a pound. 450 is problematic, and the all-time high is somewhat problematic. So, that's going to happen. I think a revisit of those highs, within the next 12 to 15 months, which is going to be bullish copper stocks. But it'll be bumpy, because it's, we talk about all of this demand for copper and the electrification of the world and all this, but remember that it takes sometimes months, years to get to that point where we see the commodity do well. One of the things that comes to mind here is fuel cell stocks. I got pitched fuel cell stocks in 1999 by a bunch of people that said, within 3 to 5 years, all these buses globally are going to have fuel cell adoption. And it's just happening over the last 2 to 3 years. It took 20 years plus for that to occur. So I from being in the business for 30 plus years, I look at things like that and remember things like that. And I think it's important to lose money along the way to teach you a lesson,
Right. And last time I had you on the show, we spoke quite a bit about gold and silver equities. So why don't we touch on that again? And if you could let us know where you think the precious metals are positioned here. Obviously, central banks are accumulating gold at record levels. The fundamentals are extraordinarily bullish. How do you see gold and silver playing out from here?
Yeah, so gold has rallied from our last interview around 1,700 and change to 1,927 now, and that's a big move in a short period of time. So I do see near-term resistance there. We topped out around 1949, so 1960 is somewhat, problematic, but 2000 a big round number, as well as 2020. Those are hopeful takeouts here this year. All eyes are on the Fed February 1st. It's not what will the Fed do. We all know it's a quarter point hike at this point. It's a 93% probability. But the comments from Powell are important, right? They always are. So I encourage all of your listeners to look at that, press conference, every single Fed meeting. Do not miss them because, one of these conferences in the next 6 to 9 months, he's going to pause and he's going to get dovish. And that is when you want to put money into the equity markets, in mass, because we're being a little more conservative than most, Jesse. Jeff Christian, myself, a few others have been calling for higher rates into 2023, but many of my peers were saying we would have had a cut already by now, and that just hasn't happened. We're starting to see a slowdown, right, from 75 to 50, 50 to a quarter, but a quarter point hike is traditionally what we saw, in recent history, not these 75s. And so if the direction is still up, I'm still thinking we're going to get another dump in gold and silver stocks and gold and silver prices this year. And that might be our last really good opportunity to load up.
Well, let's shift to the energy sector, specifically oil and gas at this point. Obviously, the stage is kind of being set for oil in particular with the embargo of Russian oil as well as natural gas, of course, and decade plus of underinvestment in the sector. A lot of the equities in the oil and gas space are offering attractive dividends. They're buying back shares. And I personally think that the general trend, if we look out over the course of the next 5 years, the next decade, is very positive for oil and gas. What are your thoughts there?
Yeah, I think it's the trend is going to be up. I mean, a couple of years ago, when we started our energy portfolio, you could have bought a lot of things really cheap, and now you're going to have to pay up, especially for the majors. I'm talking about oil stocks in particular. But we like to play, as you know, in the small and micro cap space a lot. So I still like, Trillion Energy, which I mentioned on your program, probably about 27 cents. I think it's around 28 or so now. They basically went from looking at producing in 8 wells to 11 wells recently. Nat gas prices haven't helped the stock. I mean, gas has been in a huge downtrend since our last interview. For your listeners, that's GAZ on the ETF side, or UNG if you want to deal with the K1, which we don't. So, that tracks the price of natural gas, and it's been in a terrible downtrend. But we're getting much more interested in buying that commodity outright, because it is so cheap. And so energy, I just remind people, like, what could go wrong is Russia pulls out of the Ukraine war, right? And basically then energy prices tank in the near term, I think, because we're at elevated levels because of that reason and what's happening overseas, and that will cause somewhat of a buying opportunity. But to your point, I think the trend is still up.
And so how do you think the reopening of China could potentially affect oil as well? Because I see a lot of analysts, a lot of commentators in the space specifically pointing to China reopening as potentially being a catalyst for the oil price. What are your thoughts there?
Yeah, I don't follow that commentary as closely as I probably should. I mean, I just so much to look at every day, But I think, I think of oil as a bullish commodity, right? So like, if it's not a protective commodity like gold or silver is. Right. And so that's what I just want to remind people. Like, as an energy portfolio manager, I'm 45% cash right now. And I'm okay with that because I'm waiting for something to happen. I don't know what that's going to be, but I'm not willing to pay up for Exxon and Chevron and all these names that I could have bought, and did buy, 3 years ago at much lower prices. I think we will see a pullback in energy at some point this year with regards to the equities, and that will be a buying op. But for now we're patient.
Great. So I want to get your thoughts on exiting positions, because this is a very important question that a lot of investors ask themselves when they, build conviction, whether it's in a particular commodity, a particular company. Everybody on Twitter is talking about this and that's going to go to the moon. Of course, we saw, like in the last uranium bull run pre-Fukushima, prices went parabolic, but if you held on too long, you then lost all of your gains. So how does one know when the best time might be to liquidate a position and sell? And is there a strategy you use for that? Do you sell positions all at once, or do you kind of get out of them slowly depending on what the position is?
Yeah, I'll take the last part of that first. And we exit names usually in tiers, right? So we'll do 25% of the position, then another 25. We'll do, maybe 3-4 sells instead of exiting all at once. Where we would exit all at once is when something changes and surprises us. Basically, that's on earnings. That's on, something wrong with the balance sheets. You see that a lot in junior mining, right? Where, one thing is said, another thing actually happens, and you've got to go. Right. And you've got to take your losses. And it's something that, we were down last year. I'm not happy about it. I'm very competitive. But I think that, I look at some of my peers, we're down double. We're able to survive an environment like that and then thrive in a month like January here where we're doing great. We're up like 14% for the month. So, we've made back almost all of last year's losses in 1 month. That's, and to your first part of your question, how do we do that? So we look at technicals more than the average portfolio manager, and we're value managers, right? So I look at a website, just to throw it out there, stockta.com. So stockta.com is technical analysis. On the left-hand margin, you can see support and resistance for that stock. You just type the ticker in the top left corner. It says support is this, resistance is that, and it gives different confidence levels as to where those prices are, right? And then if you page down on any stock, you'll see what's called RSI, which stands for Relative Strength Index. Typically, a 20 to 30 RSI is oversold. Okay, 70 to 80 is overbought. So we're exiting between 70 and 80. It's a really easy thing for a novice investor to start doing, and that way you're not going to get hurt in a downturn and revert a lot of your profits back, right? So
yeah, I love that approach. So before I let you go, you've mentioned a few different companies as we've been talking here. We are at the Vancouver Resource Investment Conference. Obviously, Canada has a lot of pretty amazing mining jurisdictions and a lot of projects going on. What are some Canadian companies that you're currently looking at that you think may provide, that you're either investing in or perhaps you're watching that you think might become attractive buying opportunities up ahead?
Sure. So I spent a lot of time here with Cartier Resources, which is ECRFF. Philippe has a 30-year relationship with Agnico Eagle, which is their largest shareholder, right? So it's about 19% of the company is owned by Agnico. So we look at those kind of things, Jesse, and say, why would a company that large have that big of a position in a stock, right? It's not like an Eric Sprott 9.9er. It's 19%. You're getting close to that 20% number. That gets our attention. When someone, buys a fifth of the stock or owns a fifth of the stock, possible JV opportunity, possible takeover opportunity down the road is more likely, right? And I'm most excited in the near term about their PEA, which is on the Chimo mine, and seeing what that looks like, because the Cadillac Break area is some part of Canada that we like a lot. And I think that the numbers will, surprise people to the upside. They already have 2.3 million ounces that they've talked about. So, when you get over that 2 million ounce level, the majors and the mid-tiers start to get more interested in what you're doing. Another name in silver, I'd say, would be, in recent news, Guanajuato Silver. G Silver is a really interesting company in that they bought Grey Panther's assets really cheaply, right? That was our one mistake last year, the big mistake, where we owned 0.4% of GPL, and the company, folded, basically. But they went in smartly and bought the assets for like less than $15 million, like all in. So, that's what we look for as value managers. Okay, we made a mistake over here, but let's correct that mistake by buying a better operator with better management, right, with the same asset that we liked. So that's a silver name that we've started to buy here at 30 cents US. My biggest position that I talked about on the last show, Golden Minerals, I think we'll have some news here between now and March on 2 of their different properties. Hopefully one will be El Cavar, which is a monster silver play in Argentina that's JV'd with VRIC right now. Been waiting on news there for quite some time. And that has gone from where I mentioned at 26 cents to just over 30 now. So it's still, a good value in our view. Just to throw you one in the copper space, since we talked copper, I think, World Copper right now is one of the cheapest names out there. I think I mentioned that on your last show. If not, I know I was mentioning it in November, December on other shows because it was like 10 cents. And I'm like, this is never going to last. Either of their projects is worth 10 cents in my view alone. One is in Arizona, great jurisdiction. One is in Chile, a little bit more, political disturbances there. However, the IRR, the internal rate of return on that mine in Chile, is 46%. So when you look at projects over there, they're typically around 25, 30 is a good number. So I think that Escalones could get some attention. Either they build it out themselves or they just sell it.
Great. Well, before I let you go, could you fill us in on Feneck Consulting and anywhere else you'd like to direct people online?
Yeah, I appreciate that. We just started a newsletter 2 summers ago. So that's a different type of format than most people are probably used to, in that I don't try to do 30-page, newsletters. Most of my clients don't have time to read that. So
right.
I'm not saying that's a bad thing. I just think that a 2 to 3 page summary for what I do seems to be a good format. People like that they can get a lot of information quickly. And then what I'll do, Jesse, is I'll highlight a different commodity every issue. So I'll say something about gold like we did, and here's 3 juniors, and here's 3 large names that I like, and here's why. And I'll put a couple sentences together on each. Basically, we also offer an update service to people, which is macro. So basically, we've got the Feb 1, right? We had GDP on Thursday. Each of those times, and in any type of big news that comes, I'll send an email real time to my clients and let them know, here's what happened, here's how it affects mining or energy, and basically give them some direction, right? And we talked on your last show at GDX 28. So GDX is now 32.31. Nice move, right? We were telling people all the way up. It broke 25. Be ready to go on the buy side. 28, major resistance, broken. On your show, I said it would hit 30. It hit 30, broke through major resistance, right? So it's like we look at the world like taking baby steps, You got to get through all these resistance levels along the way. That's why, even though I'm really bullish silver, I still see silver as, at 23.60, 25 is problematic, right? Got to get through 25 before we can talk 30. And so we look at things a little bit differently than most people rather than just throwing a number out there. I think it confuses clients. Like, when you hear $50 silver, well, hell, that only happened twice in the entire, last 100 years, right?
Yeah,
so it's like,
right.
so it's let's not think about an outlier. Let's just think about, how do we get through these resistance levels and be patient.
Great. Well, I'll put a link to Feneck Consulting's website in the description below. You're on Twitter as well, so I'll put a link to that. And
Thanks.
Great chatting, John, and definitely have to have you on again.
Appreciate that.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.